All right, good afternoon. I'm going to start with a few questions to the audience just so we know who is here and who is not. By raise of hands, who here has a bank account? I'm going to ask again because I didn't see a lot of. Who here has a bank account? All right, okay. Who here heard the term blockchain? And who understands what it is? Okay. Who owns Bitcoins? Fewer than who have a bank account. Who owns Ripple? Wow. Wow, okay. Okay. Again, just give you kind of a set lay of the land in terms of the stuff that we'll be talking about. Why wouldn't you start and get going? I'm going to ask the panel to introduce themselves. I'm going to start with Cassie.
Hi, everyone. Cassie Craddock from Ripple. I'm part of our business development team based out of London.
What is, just can you say what Ripple is in a few minutes?
Absolutely. So Ripple is an enterprise software company focused on transforming how payments are sent around the globe. So we work today with banks and non-bank finance institutions to send real-time money transfers around the globe.
Thank you. Darren.
Darren Upson from Soldo. We are a spend management platform for businesses of all sizes. It effectively replaces the need to ever do expense management by giving you a card, a user app, and a control dashboard. So purely B2B, but it completely removes the need to ever put an expense report in ever again.
Paul?
Hi, I'm the CEO of Met Facilities. Met Facilities is a FCA sort of regulatory hub which allows people to undertake regulated activities without necessarily going directly to an authorized firm like the FCA. And we also do some consultancy work.
And Benedetta?
My name is Benedetta. I'm the CEO of OvalMoney. OvalMoney is a platform that allows everybody to put some money aside and learn how to invest it. We are creating a marketplace of investment products, so you can actually select what type of investment product or insurance product you want to devolve this money you've saved.
Cool. Very versatile panel. Darren, I heard the term, what is open banking? Can you tell us what that is?
So open banking was introduced in January 2018. It's basically forcing banks to open up their APIs to work nicely with other organizations. It's the UK equivalent of PSD2, which is the Payment Services Directive, which is EU legislation. And effectively, as I say, it's forcing banks to work with other parties. Historically, a lot of the banks have owned the customer relationship and not really wanted to share it out. With open banking, they're releasing APIs that mean that, the fintechs, other providers can leverage those APIs to provide added value to the small businesses and consumers as well.
Okay, so now that we know what open banking is this a good thing? Do we care, Benedetta?
Yes, I think that as customers, we should care a lot, because what the regulation says very easily is that your data, your transaction data, your banking data is not, the banks shouldn't own it. You should own it yourself, and you should be able to decide where you want to read it. So today, if you want to read your transaction data, if you want to have an idea about how much balance you have on your bank account or what's your credits, you can only do this logging into your bank. Tomorrow, with open banking, because banks are forced to give APIs out to any company, actually, and it's in a secure way and it's actually regulated, but you can have, with all the privacy, let's say, regulations that are in place, but you can have the possibility to read and consume this data and use this data to reach new types of services.
So, I mean, I think I understand why open banking is good for the consumer, because the consumer kind of owns their own information, decides who gets right to read it, to use it, to update it. But for the banking industry, it feels like it's not a great thing because it takes away some of the control and power. Am I wrong?
So this is what banks think or thought initially when the regulation came in. Banks were clearly scared to lose the final contact with the customer. what it's interesting to see now is that they are more and more opening up to fintechs and realizing that actually open banking can give them an opportunity to reach a whole new set of customers that they wouldn't have been able to reach.
Interesting. And you know, when blockchain first came around and people started talking about exchanging value through Bitcoin or other means, and no longer having a need for a central bank to control our lives, et cetera. So doesn't the blockchain mean that banking in general is doomed?
I think banks are going to have to adapt to use the blockchain and start looking at their back office and middle office functions and the other applications that are available for consumers, such as open banking, and really embrace that rather than relying on their legacy technologies. And I think we've seen a shift where they're embracing it and trying to take it on, and they're investing in blockchain technologies. We see that a lot of people interested in that type of thing. So if they bite the bullet, they'll be still here. If they don't bite the bullet, they will find themselves out on the unable to meet the challenges that face them. So they need to meet it.
Cassie, you may have a unique perspective about banking and blockchain.
Yeah, so I mean, Ripple works directly with banks. We have over 100 plus banks and non-bank financial institutions that support our technologies. Right now, no joke, it is quicker for me to go to the bank, get a suitcase of cash, and fly it to Australia and hand deliver it to somebody that I want to send an international payment to. The reality is that using blockchain technology enables us to solve that exact pain point. How do we get a transaction to go in real time like we send data today? So using Ripple or blockchain technology should enable international transactions to happen in real time. And I think that's a real successful use case that we're seeing, and customers like Santander who use the technology today are really reaping the benefits from.
But again, it's a bit confusing to me to understand, why do I even need the bank? Why can't I transfer money? I'm sitting in New York and you're in Australia. I can transfer value without the need for a bank. Why would I go through a bank? I
think the reality is that we'd be unrealistic and a little bit naive to say that transactions would never go via the banks. You could use a digital asset to send transactions real time anywhere, but people aren't comfortable with that, and despite seeing a shift, banks will in reality play a part in that. So Ripple prefers and have chosen to kind of operate and work with banks directly to solve a real pain point, which is around sending international payments.
So you folks believe that the decentralized notion of blockchain will actually not manifest itself in reality, but it will still go through central organizations? I think what we've seen is that banks have traditionally supported our technologies, but the reality is that there are faster moving players like non-bank financial institutions that support and adopt our technologies quicker. V1 is to use fiat currencies to send international transactions. V2 is perhaps to use cryptocurrencies in flows. We're in a kind of a fortunate position to be able to provide real use cases and real results that make it almost impossible for banks longer term to say we can't use digital assets in our flows. We may need to support this at some point.
We also need to remember it's not just a question of just moving cash around. There's other things that banks do, which is KYC and due diligence on knowing where the source of funds are and making sure that where that money is remitted to, and all those other things that are to do with anti-money laundering side of things. So those things are still going to remain. In fact, they've been transplanted into sort of the new sort of directives dealing with AML requirements for banks and institutions. So there is going to be a need for somebody to still take control of that piece. Now, whether that's also done on the blockchain, that's very possible. There are vendors out there who are creating applications that will hold your data, your sort of identification data on the blockchain, so to ease that process rather than you always having to walk in, show your passport, et cetera, that can be made a lot easier. But you still need that side of things. It's not just a question of moving money digitally, and that's the end of it. So there's more involved in the process.
Maybe the simple way to say it is that if there will be some banks that don't take these innovations seriously and therefore are not innovating and finding solutions on top of these new technologies, that will slowly disappear. But there's going to be banks, the ones who are embracing fintech and who are sort of working towards becoming relevant in a new world where blockchain will be important, where transactions have to happen quickly, where people want their data, where customers who never had access to banking products, like what we do with Oval, is getting new banking products. And if they understand this, some banks are going to continue to be relevant. And if you look in other industries, like the telco industry, where you thought that phone companies would disappear when internet arrived, I mean, phone companies are still there, the ones that are able to innovate and work with the over-the-top, let's say, players. So there's always a game of who is able to chase new innovation and who's not able to do that.
That's a good transition. So many years ago, I spent a lot of time in the telecom industry, and I saw the evolution where the big telcos would not even listen and not even communicate with smaller, innovative startups. And over time, they kind of figure out that that's really the only way for them to survive. What can you say in terms of the banking industries? You're a smaller startup, you're a small startup. How did you find the interaction with the large, big bank, big organization that have been around for a long time? How is that? Are they adopting innovation from the outside? Are they not?
I think the environment's changing very quickly. The reality is, a couple of years ago, for a small fintech to go and have a conversation with a bank was actually a real challenge to actually get the technology even to be considered by the bank. We're now in a situation where the market's changing very, very quickly, and actually all of the key banks, all of the major banks are now looking to actually augment their existing solutions with fintech offerings to broaden their solutions and actually potentially even buy solutions to add into their mix as well. We hear all the time about the fact that there are banks where they're keener to understand what's out there that they can actually buy rather than build, because the building cycle for a bank is too long. The market has already changed by the time they actually go about and actually deliver something. So there's a huge opportunity to actually work in conjunction with a bank, deliver a solution in partnership potentially, and ultimately even create a great offering that you could sell to a bank over a period of time as well. So I think the historical challenge that a bank would see in terms of losing that customer relationship, if they truly embrace partnering with fintechs, there's actually a huge opportunity for them to actually develop a closer relationship with their clients than actually push them away, which is what they're currently doing.
Yeah, and if there is a real buy-in into innovating from the top, so you can see now with the larger banks in Europe, there's a real push coming from the top, from the CEOs or the top managers of the bank, who really understand that innovation is necessary, and therefore they actually believe exactly that probably partnering is easier than building internally, or quicker, or it actually makes them experiment more things at the same time. And therefore, for example, we're a clear example. We've just closed in June a big partnership with Intesa Sanpaolo, which is the biggest bank in Italy. And they're obviously partnering with a small startup, but they see value in using technology to address customer needs that with their own infrastructure, it's harder to do. And sometimes technology can give that access. So with Oval Money, we obviously are giving access to individuals that are not like high net worth or generally not wealthy, and that the traditional banking ecosystem had a little bit left them out. And if you can access these people through technology and through proper machine learning, giving them like personalized information, you don't need a lot of branches and a lot of people there to access and give a solution to this kind of population, which is huge. So recognizing this and working together with startups can be a very good way to even give more democratization in the financial sector.
Interesting. So, one of the things we read a lot when we hear the term blockchain is scams, fraud, grandma losing all her savings. And so, the regulatory bodies come into play in the US, the SEC, FINRA, whenever there's money involved, money transfer, money laundering, all kinds of things. And so for a small startup that does not want to be in the world of fraud or scams, how is it possible for them to know what all the regulations are? How is it possible for them to build a product or a solution that is in compliance with the regulations? Paul, maybe
Yeah, I mean, the first thing is to get good advice and get advice from people who really do know what they're talking about. So there's a number of things you want to think about. The landscape is changing very quickly about what the requirements are for in the blockchain cryptocurrencies. So that's changing, and each regulator's evolving their views. So that's a changing landscape. And then they need to think fundamentally, actually, what are we trying to do, and not try and sort of reinvent the wheel and just forget all the previous sort of history of why financial services and why these rules are there in the first place. So they need to really understand that it's not a total landscape that they can just start from afresh. There's some legacy stuff they need to take on board, but also there's some evolving things they need to take on board that which will change quickly, and they need to be able to evolve, adapt, and keep up to date with that type of stuff. So they need good advice from people who understand the space, definitely.
Darren, how hard is it to be for a small startup to be in compliance with regulations? You're in the UK, EU. How hard or easy is it?
I mean, it takes a while to go through the regulation process. The reality is, the example at Soldo was the fact that we built the product from the ground up, went through the process to get regulation, or regulatory approval in each of the countries that we operate before we actually went to market. There are other solutions that look to actually try and piggyback using a third-party service to get to market faster. And actually, for a lot of those organizations, if you are looking to move quickly, then actually that's a great opportunity for you to actually use a third party to actually speed up that process quite significantly.
Yeah. And involve them early. Those advisors, whoever, don't build your system, then turn up with it and go, this is what we've done. And someone goes, well, you can't do that. You really need to think about it from the ground up, have sort of that involvement from the very early part of the business.
Cassie, any thoughts about regulations?
I mean, for us, regulation's a good thing. We invest a lot of time, a lot of effort, working with regulatory bodies, working with governments, really to kind of get a clear stance on the positioning, and also to, make sure that people feel comfortable with this type of technology. So, yeah, Ripple are totally all for regulation, and we'll continue to invest in that resource.
And regulators are very interested in the tone, the cultural position of the business. And if it's a startup, they need to have that right cultural mindset that regulation is there, and they're going to have to deal with that thing from the very beginning, rather than as an afterthought or something not so important as the main product. So it's very important they have that right mindset in place.
And what about, one of the challenges or one of the things that were great in the age of the internet for startups is startups could be very global. It doesn't matter where you are, you can provide a service, either consumer or B2B, and it was easy. But in the world of finance and money, where regulations are different, does that not hinder innovation? So small startup in London can solve things for the UK and maybe for the EU, but they have no clue what's going on in the US, what's going on in Australia and other places. So does that not mean that innovation will be hindered?
It will slow the process down, definitely. They need to sort of think about what it's going to be different, as you rightly said. Each jurisdiction will have its own mindset, its own view of how these things should be regulated and dealt with, and they're going to have to adapt their system or application to deal with those ones in each jurisdiction, which means maybe taking out individual licenses in each jurisdiction, or trying to rely on passporting rights where they can or where possible, or having separate subsidiaries that do one thing in one place and a different subsidiary or group entity doing something somewhere else.
So when I started my company, we went to the FCA and we did the FCA sandbox. And that was a great way of getting to know better the regulation. And you have 6 months where you work directly and very closely with the regulator. And I know that a lot of other countries are trying to follow this sort of sandbox solution for regulation. So first of all, in fintech, there's a lot of fintech companies that don't have a regulation. They're maybe B2B. They do services that are specifically more tech solutions than direct-to-consumer. For anybody who has a direct-to-consumer solution, I think one of the biggest problems for the fintech space in the UK is that there is a little bit of uncertainty around what's going to happen with the regulation here and with passporting rights. Once you go abroad, I think a lot of governments, I saw like Australia is doing it, the US is doing, they're trying, the regulators, to like attract these new innovations by creating sandboxes. So it's like the sandbox is just a 6-month time where you can actually go in the country and with a small number of users, and the regulator assesses what you're doing and then finds the right way to regulate you. And for us, we're like Italian founders who decided to set up our company in the UK. It was extremely helpful to do something like this to get to know the real regulation.
And we've found a lot of our clients have found a lot of positive things to say about the sandbox experience. It's been very constructive for them, and the regulators seem to embrace, the FCA seem to have embraced this thing very well, and it's worked very well for them. So it's a good space to be in.
And sorry to stay on the topic because it's a challenging one. So when talking to entrepreneurs, a lot of time you'll hear founders saying, I had no clue about this industry. I just wanted to solve a problem that I had, and I went on and did it, and maybe, did some things wrong, and I fixed them along the way. And it's, that's the world of an innovator and an entrepreneur. But when money is involved, if an entrepreneur makes a mistake, he can end up in jail. So this is a much tougher environment. And so how do you still, when you started your company, when you talked about your company, did you know that everything you were doing is legit? Did you know that you needed to do things correctly? Or did you learn things as you went along and you were just lucky not to have broken, I'm assuming, not to have broken any laws?
So we haven't broken any laws. I used to work at Uber before this, so I don't come from a finance strictly, but from a very regulated market. And I think with very regulated markets, it's actually an interesting thing to come from an outside point of view and kind of sort of rethink things through. So not going against regulation, but maybe there's sometimes the easier way of doing something that involves you to be regulated and do things properly, but in a different way. And if you're stuck into the sort of system of banking and you're used to doing it in a certain way, that's when it's harder to innovate. So for me, from the companies I've worked in, definitely Uber is an example of a company pushing the line towards getting customers the right experience that they need. And sometimes regulation protects the consumer, but sometimes it doesn't. So it's also about understanding why it's there. And I strongly believe that if you're creating a product that is for the consumer, protects the consumer, and has the right infrastructure for privacy and for security, then you're going in the right direction.
Okay. I'm going to take it a bit technical for a second, because we're talking about blockchain. Blockchain is underlying technology. And I'm curious, Cassie, the famous blockchains out there are, there's Bitcoin, there's Ethereum, Neo, there's a variety of blockchains. And yet, for some reason, I think the most successful blockchain to enter the incumbent world of banking is Ripple. Now, why is that? How come, what did Ripple do better, or what's your secret?
I think Ripple have solved a real-life problem. We've chosen to work with banks rather than kind of go around them. And utilizing the blockchain enables us to solve for cross-border payments. And I think people really struggle to make those, and I think it's a really strong use case. And I'm sure that as time goes on, Ripple will become more and more successful as we partner with more banks and really make the proof points available to everyone around the globe.
Interesting. And I think a lot of people may not know, I think Ripple came out before, one of the most popular chains nowadays is Ethereum. A lot of the things that you hear about ICOs, many of them are built on Ethereum. But Ripple was out there actually before Ethereum. And maybe that had something to do with its kind of not a first mover, but an earlier mover advantage.
Sorry, I really didn't hear that. What was that? I couldn't hear what you said.
Oh,
about
I'm
Ethereum.
saying that the Ripple chain came out before the Ethereum chain into existence, and maybe being earlier was helpful in terms of getting the more traditional banking industry to adopt it?
Potentially, I'm not too sure. I think, again, Ripple have really focused on a specific use case, whereas Ethereum, you know, they have tons of use cases. People are using it for all types of things, whereas we've been really focused on solving for banks and financial institutions. So I think that's why you're seeing Ripple's technologies take off.
Paul, I think part of what you do, you see a lot of startups who focus on blockchain. Are you able to, because of your perspective, to see specific trends in terms of specific technologies that are being used, certain things that you're able to see that we are not?
So I would say, like, almost a year ago, everyone was very much just focused on cryptocurrencies and the blockchain, but now there's more sort of a more mature view, and people have a lot of ambition doing things that relate to other technologies or other industries using the blockchain, like pharma and property and other things. So that's moved away, and it's now less focused on crypto and more focused on more traditional raising VC type activity, but using the blockchain, the ICO technology, the ICO concept as a means to raise money or to make their businesses more successful, more agile. So that's the real trend, the change I've seen. And some of that sort of that utility token isn't a regulated side of things, but people are moving again more towards the securitized token that is definitely in the sort of scope of needing regulation and sort of a traditional type of VC activity. So that's the main change I've seen.
We take a step back and look at it from a global perspective. Do you see, and this is a question to the panel, do you see that the blockchain technology as it impacts the financial markets? I mean, London, I would say, traditionally was a kind of the financial number one or two areas in the world, depending on your perspective. Given Brexit, given political differences in the US, do you still think that London will continue and keep its dominance, or do you think things are going to move out of here to somewhere else?
I still think people still turn up at my office and say, despite Brexit, we still want to be in London. You know, they still see the centre, a lot of the talent in London, and they want to do business here, and we're sort of people try and work through Brexit when the time comes, whatever that ends up looking like. But London still has that very much focus and has a real cordon bleu or hallmark around it to be the place to do business, this type of activity. There's a lot of talent here.
Darren, your thoughts?
I mean, from my perspective, I think the fintech scene in London's absolutely buzzing at the moment. I mean, we've got a situation where more and more businesses are coming up. We've got situations where the likes of Starling, Monzo are completely transforming what's happening from a consumer perspective. That's now bleeding through to business as well. Open banking is opening up the opportunity for fintechs as well. There's a huge, huge opportunity for fintechs to really make a big impression. I think what then follows from that is actually the opportunity to then expand into other markets as well. And we're still well positioned, even with Brexit on the horizon, for the UK or London specifically to be a hotbed of talent as well. So,
okay. So a little bit about your vision for the future. So in today's world, we know how we interact with banks. You know, we do online banking, we go to the ATM occasionally, we do international wire transfers using the SWIFT system. 10 years from now, what does that look like? What does the banking interaction for the end consumer look like from your perspective?
So I think that the banking solution and these new challenger banks and new fintechs that are coming up are already showing this, is that there has been, first of all, a sort of splitting up of services of the banks. So you could go to a loan provider and it's a new tech company, or like a payment provider that does like TransferWise, who does payments, and so there was a lot of like specialization into specific different areas. And I think that in the next future, what will happen is that customers will be able to use more single aggregators to do a lot of these solutions in one. And some of them will be banks in the background. Like, let's say, there will still be a banking infrastructure, but the relationship with the customer, to become more democratized, will have multi-brands. So even though if it's one infrastructure, there will be a multi-branded approach. So today, if you think about it, a bank has its branch and it has its own brand, and everybody from a millennial to my grandfather go to the same bank and get the same experience. I don't think this will be the case in the future. So there will be people who access banks fully digital. There will be people who want a sort of digital physical solution, some people who want to talk to a person, some people who will only chat to a robot, etc. And so it will become a lot more personalized, which is what internet has done with a lot of different services. So you will see a fully personalized experience, maybe under different types of brands, and therefore a more segmented type of solution.
Cassie, your vision?
I think innovation has been key, and we've kind of seen tier 2 challenger banks really, aggressively seek out a new customer set, whether or not that's a corporate, a consumer, and the reality is that they see a weakness with the tier 1 banks, that if they can innovate and if they can offer something unique, then they'll win business. I think that solving for global transactions is a real and is still a real pain point. And I think that in 10 years from now, if Ripple is to be as successful as we'd love it to be, then international payments should happen in 3 to 5 seconds anywhere around the globe. We have use cases that support that. So a guy who wants to send his child money from Asia to the UK because he needs some rent for students. That is a real-life use case that we do today, and we can offer real-time settlement and transaction within 3 to 5 seconds, which I think, if we can do that on a global scale, which is Ripple's vision, I think that, the banking sector and financial services as a whole, they're onto a real winner there.
I think there's an important thing also to remember: accessibility. Some parts of the UK still have almost only dial-up speed, and I think what will make a difference is, when 5G comes along, that ability to do mobile activity with a really fast connection, when that eventually gets rolled out, that will give a lot more people access to reliable and fast applications on their phones or tablets when they're out and about, and the innovation will take off even more than we've already seen. I think it's a very exciting time for everybody, but it needs to be coupled with the ability to either have the phones that aren't or the devices that aren't too expensive, and ability to access the internet when you're remote. It's going to make a big difference.
I think for me, banks really need to raise their game over the next few years, and I think in 10 years' time, we'll have a situation where we're already seeing organizations like Metro Bank build a solution around the convenience for their customer by actually having stores that are open to the hours that meet the requirements of the customer. That doesn't exist with the vast majority of banks. So I think where a bank actually wants to have a physical presence, they need to start thinking about how the customer actually wants to interact with the bank on an ongoing basis. I think we have a situation where the likes of Monzo, Starling, those types of solutions, at the moment they're really, for most people, a second account where they might use it for travel and various things like that. But actually, moving forwards, I think we'll see more switching take place between traditional bank accounts and actually those challenger type of solutions, especially when the likes of Monzo and Starling start really taking advantage of the marketplaces, being able to add additional levels of solutions on top of their current products to then provide added value services to their client base as well. There's going to be so much innovation take place. What needs to happen is the banks need to actually understand how they can capitalize on the opportunity and move much, much faster than they currently do. And for me, the only way they can really do that is by partnering with fintechs. So I think the opportunity is massive. It's just going to be interesting to see how it plays out.
So I will just add my 2 cents here. I have a much more radical vision for the future. I think we're entering the dawn of the security tokenization era, where everything gets tokenized, meaning from real estate to any asset, from this chair here, this building here, everything that today is either not represented by any instrument or is represented by what we know as shares, I think will disappear. Will all be represented by tokens. We all will be owners of various tokens and things that we believe in. And I think the role of banks will change radically. We were talking about personal banking, but there's huge multi-trillion-dollar industry of investment banking, and I think that's going to change. And I think a decade from now, the big names that exist today may not be there. It may, I don't know if J.P. Morgan, Goldman Sachs, Bank of America, HSBC, I don't know if they'll be the big bankers 10 or 15 years from now. A few more minutes. I want to talk about savings for a second. So in the US, I believe the stats are horrific, and that 70% of the population don't have 1 cent saved. Nothing. I don't know what the situation is in Europe.
50% of all, let's say, young millennials have less than 100 euros saved. Less than
100 euro, 50%. That's a huge number of people. We know that governments are bankrupt. We know that the Social Security, at least in the U.S., won't have money. I don't know the equivalent in Europe, but I'm going to assume the same. So unless people figure out a way of saving, humankind is doomed. So how are you helping here?
So I'm happy that you put it this way. We definitely are trying to help, let's say, young adults, people who are in their initial life stage of working, by using technology to do 3 things. First of all, we show them how they spend, which is a first part to saving, is understanding how badly you are spending. And from that part, we give suggested saving rules that they can apply on a weekly basis so that they can actually decide how much to put away. And our user, on average, actually puts away over £100 every month, which is, considering that they had 100 euros in total, is quite a good number. And
one of
the things that we see, which is even more interesting, is that they put more and more away every month. So the cohorts of people who started using our app like a year ago are saving 18% more month over month. And this is just by putting really personalized solutions and making it very flexible. One of the things that exists in Europe is very big, especially in continental Europe, is these like fixed plans where you contribute, but they're very fixed. You sign a contract, you have to say you commit to them for like 30 years, and clearly our generation is not ready to do that. We move around. We're not sure if we're going to stay in the same job very often. We work in startups, which is super risky. And so we want a more flexible solution. So just inserting flexibility and giving a personalized tool through technology helps people save over £130 every month.
And what's the name of your service?
Oval Money.
Oval Money.
Yeah.
Okay. Oval Money. I'm hoping to hear people downloading this right now, because I think, again, it's nothing to do with your company, but it's a terrible issue for society when people don't save and won't have money. And if you go from an average of having 100 euros saved to saving over £100 a month, I think that's an incredible achievement. We have a few more minutes, so I think I'm going to ask the audience if there are any questions and something that you want to pose to our panel. Yes, over there. I can't hear anything. Can someone give him maybe a microphone? There you go. The gentleman over there.
Okay.
Hi, I got plenty of questions I could ask about specifics about the blockchain, but I think just while I have all you guys up here who are sort of future leaders of companies of the future, companies that hold great promise. What concerns me is that, and first, full disclosure, I used to work for Uber as well. What concerns me is that all of this is predicated on a future promise of this great prosperity from this technology. In the same way, like, oh, the future of Uber, even though it's losing money now, once it consolidates and they have autonomous cars, the future will be very prosperous. I'm concerned if that doesn't eventuate, then like, what kind of future are we in for 10, 15 years from now? Thanks.
So you're talking about the fact that startups initially lose money to scale, and why is it? So I think that, and this is a general question, it's not a fintech question, but startups generally innovate and reuse the capital they have to innovate more and to grow and to hire people. And a company like Amazon was losing money, if you want to say in like terms, real terms, for many years, but they created a gigantic value. So for me, if companies are able, an investment, there's a market to allow companies for a few years to like spend money to grow and innovate. That's a great future for the consumer or whatever market they're trying to innovate in. Because it's clearly difficult to start a company from zero and be like profitable in day one. You can do it, but you're not going to be able to scale the way you want to and innovate the way and affect that change. So for me, it's just the nature of doing business.
Yeah, I mean, for me, I mean, at the end of the day, if you have a startup, you have to have a business model. If you don't have a business model that supports a commercially viable business in the future, then actually no one's going to invest in you to start with. So actually, it's about making sure that you've got not just a great idea, but actually a route to market that's going to ultimately make you money and a pathway through to actually start to be in the black. You know, for an organization like ours, you know, we're Series A funded, and you know, we're working out the process to actually go through that journey to get to the stage where we can go from being a startup to a scale up and beyond. And it's a case of putting the right people in place, making sure the right processes are in place, and ultimately making sure that there's a need in the market for a solution like ours. Unless we do that, we're not going to get the additional levels of funding that we require to scale the business to what we're capable of doing.
I would say 20 or 30 years ago, the Fortune 500 top companies were Exxon, you know, GM, Ford. Today, the top companies are Facebook, Apple, Amazon, Netflix, Google. All of these companies didn't exist 20 years ago. All started by entrepreneurs with ideas who are innovators. I believe that's our future, and that's where prosperity and hopefully a better life for all will come to mankind. Mm-hmm. And with this final note, I think we'll close. Thank you.